How to invest in gold. Again, I always like to reiterate what I'm trying to do here. I'm trying to take news and topics that you may see online and break them down into a format that can be easily understandable for just about anyone. That's what I've been doing on social media for the last 6 months to 1 year, and that's what I will continue to be doing on these YouTube videos. 6 months ago, I ripped this advertisement out The Economist and hung it up on my vision board. My curiosity was instantly piqued. The case for investing in gold. I read through it thoroughly many times over, but I had to know more. Why should I invest in gold? How can I invest in gold? Where do I even buy it from? These questions I had 6 months ago, I have now been able to answer. So now I give you the answer so you don't have to spend time looking for it like I did. How and why you should invest in gold. Investing in gold is an important part of a larger investment portfolio, especially as a form of diversifying your types of investment. Gold has held its value for hundreds of years, and because of this, it is seen as a tangible asset into which your investment can be stored and preserved for future generations. Over the years, holding gold has become a staple in many large investment portfolios. Gold has been able to hold its value over hundreds of years, and because of this, it has been seen as a good way to diversify your investment. You should watch my video on investing for beginners to learn about diversification. Gold doesn't have a connection to other investments like the stock market. In fact, during difficult economic periods like the 2008 financial crash or 2020 March COVID related crash, gold has increased in value and reached record high levels as a response to growing economic uncertainty. During these two periods, the stock market crashed but gold stayed up. More people wanted to buy gold, so gold price increased. Another reason why you should invest in gold, tax advantage. Investing in bullion bars, gold, which is gold before coining, which is valued by weight, in the UK and EU is tax and stamp duty free. Gold coins minted and after 1837 that are legal UK tender at the time they were purchased or sold are exempt from capital tax gains. Some investors see gold as a way to pass on wealth rather than generate earnings, although gold is not exempt from inheritance tax. So, how do you invest in gold for beginners? Let's start with physical gold. So, your first thought when you thought about investing into gold is probably the same as mine, physical gold bars. Gold can be purchased in the form of coins, ingots, bars, and wafers. Gold bullion coins are physical coins made out of gold. Throughout most of history, bullion coins served as a primary form of currency. Think gold coins from the Greek era. But ever since the introduction of fiat money, so paper notes, the pound, the dollar, the yen, that's fiat money, the money that we know and use today, the role of these coins has been limited to two things: a collectible item and an investment asset. People collect gold coins because they look nice, plain and simple. Investors get gold coins as they can use it to hedge against inflation. This basically means these investors believe the price of the dollar/pound will fall, i.e., inflation. So they would rather buy gold coins knowing that it would increase during an economic uncertainty. Remember what I said earlier, how gold has increased while during last year everything else was decreasing. Gold increased in 2008 financial crash while everything else was decreasing. So let's go on to gold bars. Gold bars come as cast or minted. Cast gold bars is just molten gold poured into a mold and then it cools into bricks. Minted gold bars are more expensive and a little bit more complicated to make as they come with fancy engravings on it. Minted gold bars are better when it comes to selling the bars, as with cast gold bars, you only get the weighted value as opposed to minted gold bars, which are more eye appealing, so they can go for more than their weighted value. You know what I mean? So where can you buy these gold and gold bars and gold coins and the minted and all that? Okay, so the best place to buy your gold is from the Royal Mint. This is the most trusted source. The Royal Mint is a government-owned mint that produces coins for the United Kingdom. You can buy some nice gold coins if you want to collect, or you can invest in some gold bars if you want to store, and then you can let them store it and secure it for you, or you can hold it yourself and secure yourself. I'm going to get onto the advantages and disadvantages of storing the gold or letting them store it. So, non-physical gold. Non-physical gold. You can choose to buy shares in companies involved in the mining and exploration of gold, or invest in financial instruments that base their performance on the future value and changes in gold price. These include options, futures, and spread betting. You do not own gold in any of these examples. So, with stocks and companies that you can buy that are involved in the mining and exploration of gold, you've got stocks like Satira Gold. That's a Canadian-based gold mining and exploration company. You've got Jaguar Mining, another Canadian-based mining company that explores and develops gold properties. You've got Torex Gold. These are all Canadian-based gold producers that are involved in the exploration and development of mining gold. And you can look at these and just say simply to yourself, okay, gold is one of these things where there's extremely high demands but not enough supply. So if these are the companies that are going to be getting this gold, then why not that it would go up? You can find these companies on stockbrokers, on stockbroker services such as Hargreaves Laundon, Trading 212, Free Trade, Stake, eToro, Robinhood, you name it. So ETFs, you can buy into ETFs that track and give you exposure to gold. These hold gold as an underlying asset or invest in gold future contracts. Investors view ETFs as a relatively liquid and low-cost option for investing in gold. So some ETFs that you can involve yourself in are Goldman Sachs Physical Gold ETF, ticker symbol AAAU, iShares Gold Trust, ticker IAU, and Granite Shares Gold Trust, ticker BAR. You can find these ETFs again on your stockbrokers, as I said before. So Forex, you can trade gold. Ticker is XAU/USD. You can use a broker service to trade gold. MT4 plus 500, IG, any foreign exchange trading broker will allow you to trade this commodity. A short-term trader can profit from the frequent trends in gold by using a moving average crossover strategy. A long-term trader can focus more on the fundamentals that drive gold's price, such as the level of real interest rates. The chart below shows the relationship between gold prices and the yield on TIPS, a proxy for real interest rates in the United States. You can also trade and buy non-physical gold through the Royal Mint, which they call DigiGold. So the Royal Mint, as I said before, you can buy physical, but you can also get some non-physical through them as well. And they call it DigiGold, as I said before. Investors can buy gold on an allocated or unallocated basis, either with a bank or through a bullion brokerage. Allocated ownership means you own the gold totally, your name's on it, you have to figure out how to secure it and store it, and you're totally responsible for it. This usually means physical gold. So this means you, again, buying the gold, you have to figure out how to store it and hold it, etc. Unallocated storage means a third party owns the gold and takes care of the storage and security of the gold. All you do is pay whatever current price for the gold is, and when you're ready to sell, it will be sold for whatever the current price is. This usually involves non-physical gold. What you have to worry is that there will be high fees with that, as you do have to pay for the security and storage of that gold. Now, I've talked about why you should be investing in gold and the advantages of it, but here is why you shouldn't invest in gold. Gold is not risk-free, and the price and the value of gold depends upon supply and demand. This means that either of these changes, then its price can also change too. There are no guarantees that its value will always increase. Number 2, it doesn't provide an income, doesn't pay interest or pay any dividends. Number 3, it is expensive to store and doesn't have many uses. Cast gold bars can be incredibly expensive. Just a 1 kilogram gold bar can cost you more than £42,000 and they are extremely impractical to store. It doesn't make any practical sense to store a 5 kilo bar of cast iron gold. That's almost a million pounds of precious metal. You can't just keep something like that in your house. You're gonna have to outsource it, and then to store and then the amount that they're gonna charge you to store it is gonna also be incredible. Number 4, investing in physical gold is an unregulated activity. This means in the UK, there is no regulation that monitors selling a physical gold as an investment. If you bought gold unallocated through your bank, and if that bank goes bust, these gold reserves could be at risk and would not be protected under a regulatory scheme such as the FCA, Financial Services Compensation Scheme, the FSCS. Final thoughts. I personally don't believe investing in gold for the average investor is a wise decision. Trading gold is a different story, because if you know what you're doing, yeah, cool, you can make some money. But investing in gold, especially physical gold, doesn't really make a lot of sense for the average beginner investor. It's slow, expensive, and boring. I wouldn't advise. Non-physical, yes. If you want to hold gold that bad, then yeah, non-physical would definitely be the one. And I would only recommend about